Hey traders, welcome back to another recap. So if you look at my telegram here, you can see close full on gold for 6.4 hour, and this is actually a follow-up on this previous recap video. So in my previous video, I mentioned that I was running 300 over K on gold short, running for 4.76 hour. If you haven't watched the video, please watch it. And the position is finally closed for 6.45 hour. And I just want to go through the entire thought process on why did I decide to close to close full TP at 32.05. To be specific, this position is a so-called static TP trade, and I'm also currently running a dollar yen short. Again, this setup has been called inside our trade club as well. As you all can see, if you scroll up, see that? So we'll be setting a sell limit on dollar yen at 147.178 as the setup has fulfilled all my criteria. SL at where covering the 15-minute swing high, still holding my gold short. So the position actually got triggered while I was holding my gold short. So yesterday, the position got triggered. So fully transparent, it's all real time, and I'm still holding on to it, and I'll go into the exact thought process. Or why not, let's talk about dollar yen now first. So I was looking to short dollar yen, main reason being we have a clear daily downtrend. So when I see this kind of clear daily downtrend, some traders, they'll try to flip direction back and forth, as in they go long based on the 1 hour, they go short, whatever. My trading style has always been to stick with the higher probability of success. So if I see the daily is on a massive downtrend, I'm those that I will much prefer waiting for pullback to continue shorting into the downtrend, as opposed to oh I see 1 hour is doing this. Let's say you drop down onto the 1 hour. This is a common, I wouldn't say mistakes, but a common trading style for majority of traders. They ignore the high time frame. All they do is, oh, the 1 hour is going up, I go long. You can do that, but over the long term, you realize with a lack of understanding, or if you are being uninformed about the high time frame direction, and especially the market structure or the market direction, you are very likely to have certain positions where you take a trade and you realize, hey, why did it reverse against me so aggressive? Have you ever taken a position based on the lower time frame? Let's say you go long based on a double bottom, okay, and you buy, and immediately you got slapped with a full SL. If you have ever experienced this, that's normally because you neglected the higher time frame direction, or the market condition, or the market structure. Remember, higher time frame highlight. Market condition, market direction, and so many traders actually get confused between what's a market direction and market structure. I thought if it's bullish, it's bullish. No. Remember, we can be on a strong trend, a weak trend, a grinding trend, a choppy trend. We can be on a range, we can be on a messy range, we can be on a high volume market, low volume market, volatility expansion, volatility contraction, and the list goes on. If you take a trade on a lower time frame purely based on what you see, let's say you trade on a 15-minute and you go down onto the 15, you say, oh, I want to buy here because of this 15-minute price pattern. Then again, like I said, it's not that it's wrong, but there'll be many times where you take a trade and just very oddly you get stopped out and you don't know what's exactly happening. I can't even explain it. Obviously, we still cannot find explanation in every single losses that we take, but we can always find lesson on the losses that we have. So go back to this. I was looking to short dollar yen because it's on an overall downtrend. Just because price pull back really steep from 140.64 up until here, it doesn't mean we are reversing back bullish. It only means one thing: where the sellers are trying to find a better value to continue shorting. That's it. So the market is always balanced. Every time when the majority actually disagree with the price point, market would then pull back to so-called true value before the next wave down. This is a basic concept of supply and demand. So still on the downtrend, I was still looking for short. One key reason why we looked for short, if you look at my Telegram, you can actually see, if I scroll up, you can see we actually started talking about dollar yen earlier, and go on. Oh, sorry, I think, yeah, you see this? So back in 8th of May, which was when's 8th of May? Last week. In last week, I've already mentioned I'm observing dollar yen, especially on how it reacts to, let me try to find the point. Yeah, I'm already observing dollar yen and see how it reacts at certain zone. I can't really click in the image. I'm not sure why, but yeah, right now price have already it's sort of pumped really aggressive, broken that 147.11 area. And what makes me continue shorting dollar yen? It was because despite, let me just remove this and make it clearer. Despite the massive rally, we still respected the previous swing high, and we have TPF strategy. We also have BNR strategy. So if you zoom down onto, you see 4 hour, I want all of you just remember we sort of swept the high and we come back below. Let's drop down onto the 30-minute, and what can you all see here? We actually formed a TPF pattern. So we have a TPF strategy here, and it started dropping. And it was only when price, again, every single setup needs to have a strict criteria. It was until dollar yen broke back below this 147.07, then it validated our BNR entry. And yeah, still holding on to the trade, currently running about 1.5 hour, and we'll see how it goes. So go back to gold again. I decided to close full position on gold at 32.05 because it was a mean reversion setup. We can't call this a downtrend just because of multiple red days. Because if you drop down onto the 8 hour, how many days, how many candles do we have? It's only 12 8-hour bar, which is about 6 days. Just because price turns bearish for 6 days, it does not tell us we are reversing bearish completely. And we have a key lesson that I always share with our trade club traders is try to identify what's a true swing high and what's a true swing low, and what's a minor swing high, minor swing low. And we have different terms like intermediate structure, all these things. So price right now, it is bearish, obviously, for the past few days, but not until it breaks below this true swing high point at 31.53. This is technically still on an uptrend. So if let's say I were to re-short gold, as I mentioned, since it's a mean reversion setup, I'm more than happy to secure full TP at 32.05. I have different setups grading system. So certain setup, especially if trend following based is a momentum setup, I will most likely to have an open target. Open target means I have no TP. I don't have any physical TP target, the TP level there. I'll just let the position run. But there are also times where the setup is mean reversion. I know the odds are not favoring me. Then I'll most likely have a conservative target. In this case, it's not exactly conservative, just like this dollar yen. Okay, look at this dollar yen. I'm looking to short this based on many evidences I had. It's all about gathering evidence. That's what makes an A+ setup. So that's a whole different topic. I'm looking for this high probability short based on so many confluence, and I took the short. But why am I having a static TP only for how many R? 3.96 R at 145.02 is because it has a conflict in terms of the higher time frame direction versus the lower time frame direction. And me as a short-term trader, I need to fully understand, as much as I love relying on the daily chart or the weekly chart or the 2 days chart, the 4 hour, 8 hour, whatever, I cannot ignore the short-term trend because I'm a short-term trader. I'm not a position trader where I hold a trade over a few months, right? So during times where if I have a conflict in direction, so we have short-term bullish, we have long-term bearish, I would then decide to have a conservative TP. If let's say price, breaks below this swing point at 144.88, I can always look for a re-entry below the zone, so-called a BNR. And that explains why I only have a static TP on gold, is because it was a mean reversion trade. Yesterday I saw a comment, it was a very friendly comment. He said that, I'm not sure if I can click it. I can't really click it. So he said that, you closed your gold too early. If you were to wait a bit longer, you could have secured another few hundred points, but that's more of a hindsight. And we don't allow hindsight to be involved in my decision-making process. I stick to my strategy. That's it. If my strategy tells me, if my system tells me this is a mean reversion setup or this is a range trade and I need to have a static TP, I put that static TP. I don't care if it runs 1,000 points, 5,000 points, I'll let it be. If the setup itself is an open target trade, I'll just let it run. But if it's supposed to be a 6-hour trade, but I close it out early due to fear or due to any mismanagement, that will be my problem. Okay, so this trade's A+, beautiful trade, one of the best trade this year, in fact. And yeah, right now it's still on bullish, and I won't be switching bearish just because of this break below the swing low, because true swing high means the real resistance. Let me just ask all of you a very simple logic. Comparing to this to, let me plot it out. There are times where we trade a break and retest, right? So let's say we have a resistance and it breaks and it becomes a support. Versus, let me ask all of you this. This and this, let me just label it A. Sorry, I think I write it wrongly. Okay, this is B. So A and B. A very common thing is we say, price, let's say this is on a massive uptrend, right? Wait. Sorry. I'm giving a wrong example. Let me draw another example for you. So let's say we have this. Okay, let me do it again. I'm so sorry. I'm a bit blur right now. So let's say it goes up. And it goes up. And price, let's say, started to reverse. Some traders will say, okay, this is one zone, this is two zone. Some traders see a break below this and they immediately switch bearish. And let me ask all of you, why when price breaks this zone, the trend is overall still bullish? It can come here, go back deeper, and so boom, go back into an uptrend. Because resistance now turns support, it isn't as significant as real support. This is what I refer to true swing high, swing low. This is also another topic that we teach inside our trade club. So true swing low means we have real buyers. What defines an uptrend? When price formed higher low, right? Price formed higher high, yes, in fact, is also considered a sign of uptrend. But what makes it so strong is price keeps defending higher low, higher low, higher low. So the same goes to this. just because price breaks below 29.75, let's say this level here, and it comes back deeper, are we turning onto a downtrend? No, because if price comes here and it reverses, imagine this, we will still be forming a higher low. Lower low, higher low. I hope this very simple explanation gives some of you an aha moment, because I realize many of you and many traders simply have a misunderstanding of what defines a trend. What defines a trend? It isn't all this BNR zone. BNR zone, yes, they're powerful, but this is still just a simple pattern, a simple logic. What makes it strong is the fact that price is printing a solid support. Up until here, we're still bullish. Only if price breaks below here, and then we can call it we're officially turning bearish. Though the same logic goes to this gold as well. Although it's not identical, but you see, we have some swing low here, but if price is currently sitting here, does that mean we are bearish? Not really as well. Only if we breaks below this true resistance, and if price is rejecting this level, then we know, hey, sellers are back. The same thing goes to here, because this example, if I were to extend it, it would look something like this as well. Okay, and only then, when price breaks below this zone, we can officially call it bearish, because we have broken below the support. We are also defending this key resistance level, and the same logic goes to here. Just because price breaks below this doesn't mean anything, because we're here talking about potential a long-term shift in structure. We need to gather more evidence. That's it. So I do feel apologize for giving some false example at the very beginning. I was a bit blur. I'm so sorry, but I hope all of you learned something new from this very simple lesson and this recap. And that's it for the video. If you like it, please don't forget to like, share, and subscribe, and I'll talk to you all next time. Bye-bye.